All right, guys, welcome back to the show. I'm lucky enough to have Millennial Moron back. No idea what his real name is. He doesn't give it out, but he just goes by Millennial Moron. Has a great YouTube channel. I'm a big watcher of it, so I asked him to come on the show again. He was on about like a year ago, I think. I think when Pierre was like a shoo-in to win the election, and Trudeau was doing a horrible job, and then we all know what happened and how that story ended up going. But how you been, man? I know you got a new job or a new role at Rentals.ca, working with data, working more in this kind of field you created from a content creator that you are off TikTok. So yeah, how's everything been?
Yeah, it's been going good. The new job is nice. It's nice to be able to do the sort of like data and looking into spreadsheets full of, nitty gritty details that I enjoy doing and actually get paid for it. So yeah, it's been going good.
I know. I just saw you had a little ghee sponsorship as well.
Yeah. I've been using that for years. I was like one of their kind of original customers, and I was like, I get all these emails about like, oh, do you want to sponsor, or do you want to represent our online trading platform or whatever? And I'm like, no. Why don't I just boost this business that I already like that's making a Canadian product?
It's so funny that like everybody thinks that if you have a platform, you make all this money, and maybe in the States, but it's definitely not here in Canada. Like you don't make any money. This is more just like a hobby and for fun. So, yeah. But yeah, man, we were talking just before we came on here, the budget, how bad it's going to be. The watchdog was on it. You said, have you read the PBO today? What are you seeing? What are you kind of foreseeing coming down this pipeline of Canadian budget?
Well, so obviously they're making a big bet. The Liberals are doing. I mean, it's kind of a repeat of what they said they were going to do in the 2015 platform, where they said we're going to invest in a bunch of infrastructure. Remains to be seen if they'll actually be doing that. But they were starting this time from a position of a very steep budgetary deficit. Now they want to introduce all this capital spending, which might pan out well in the long term if that actually provides a return in terms of economic growth. But the issue is we're already in such a bad fiscal position that the parliamentary budget officer published this report saying that if we continue on this path that we're going down now, instead of keeping on our traditional fiscal anchor of a declining debt to GDP ratio, it's actually going to start climbing. And that has long-term repercussions. So one of the big concerns for me is that public debt charges, which is the interest that we pay on our government debt, is currently about $53 billion a year for this year's budget. And by 2030-31, it's projected to go up to 83 billion. So that's just money that we're throwing away on interest payments, right? So we would need to see a pretty big return on investment in terms of economic growth and increased tax revenue for all this deficit spending to actually pay off.
Yeah, it's crazy that when Harper left, there was a surplus, wasn't there, like of $1 billion or something? And now we're obviously COVID happened.
I would call it a balanced budget, right? But
balanced budget, yeah.
When an election comes around, governments always pull some different tricks. Like with Harper, it was selling off a bunch of assets that had been purchased in previous years with deficits. So they went from a few $1 billion deficit, which is minuscule by today's standards, to a few billion surplus. And the Liberals do the same thing with just purely accounting tricks. They call it like the contingency fund. They just say, we're going to make this contingency fund, and this year it's going to be $10 billion. And then, a few years later, we'll reduce it down to like $1 billion or $3 billion. And so you create this kind of like budgetary surplus out of nowhere because you're just changing the size of your contingency fund.
Yeah. So when you hear like Pierre and the Conservatives are like attacking the Liberals right now over this budget because they haven't tabled one in a while. And it felt like they did it with Chrystia Freeland, and now they're doing it with Philippe Champagne. So when they say things like, we are going to invest more, Mr. Speaker, are they kind of preparing us for a larger deficit? Is that kind of the idea behind it? And then what are they investing in that is going to be so beneficial for Canadians that they say, or is it still kind of unknown?
It's still a little bit unknown. They have released a sort of preliminary projects list, major projects list. But to your point, they're absolutely preparing us for a larger budget deficit. And so the idea that they've been saying is they want to invest in large infrastructure projects that will boost the economy. And the question is, will we get a list of projects that actually does that, and will those projects actually get completed? Right? When the Trudeau Liberals did this, they created the Canada Infrastructure Bank. They said it was going to create all these big public-private partnership projects. It didn't. It's only in the last few years that somebody else has taken it over and started doing a lot more small, locally focused projects. And that's actually been successful after quite a few years of nothing, but they didn't pan out in terms of these like big infrastructure, big, civil works projects that they had claimed it would. What they also ended up doing, and this created, the much larger deficits that than they initially said. Right, in the 2015 budget, they said it was going to be $10 billion a year deficit to invest in infrastructure. What we ended up with was roughly $40 billion a year deficits, and it didn't invest in infrastructure. But what they were doing was that they kept recharacterizing just program spending as social infrastructure, which is, it's that's just a way to say, oh, we said we were going to do infrastructure, we didn't do infrastructure, we're going to change what infrastructure means, and say that's what we were doing. So it's been a bit messy.
Is the only way really like to get this budget remotely more balanced? Is it to we're just going to keep increasing taxes on people, or could you actually stop spending as much money, like Pierre kind of says, on consultants, on foreign aid, on things like that? Or is it just, we have to spend that money and we have to tax the rich per se? Or is there a better way to do this?
In terms of where we're at right now, I think if we actually wanted to balance the budget, we probably would need to increase taxes somewhat. There's an element of spending reduction that can be done. You could say things like foreign aid. I think there's also room for things like OAS reform, because that's our biggest line item in the budget, right, is OAS. And the threshold to start getting that clawed back is quite high. It's almost $100,000 of income per individual, and that's when it starts getting clawed back. And there's no kind of assets or needs test for it, really. It's just an income test. Right now, you've got households that could be, retirees that have a fully paid off home, that have a combined income of, $200,000, $250,000 a year, and they're getting paid OAS money. And it's not like CPP where it's something that you pay into your whole life and then you get some back. It's just a straight program spending thing, right? So you might have somebody who is, a young person working, making $40,000, $50,000 a year and kind of struggling to get by, and they are getting, directly or indirectly, some of their tax money is being taken from them and given to much wealthier, older households, right? Yeah, basically. So I think there is room for some reform there. Generation Squeeze wrote an article about it, and that really caused a big stir on social media. People saying Carney's trying to take your pension away from you. And so now the conservatives who previously, if you remember, before the 2015 election, they tried to increase the OAS eligibility age from 65 to 67. And now they're coming out with messaging saying, we're going to protect your OAS and, we're going to keep the retirement age at 65. And, I think it's become this real political hot potato, but it's also our biggest spending program by far.
Wow, that's interesting, because you have the boomers who are, for the most part, if you bought a house, you're sitting on a good amount of equity, plus a lot of them do have pensions, because pensions were popular back in the day, right? Not quite as much as they were now, and they're getting more money on top of that. So you're kind of taken from the young millennial who's already probably living in their parents' house. So that's how they're paying their parents' rent, pretty much, is through that taxation, and it's going to their parents in a sense, right?
Yeah, in a sense.
Yeah.
God, I had a point that I wanted to make there, and let me think of it, and then we can cut this segment out.
Yeah. It'll cut it. Don't worry about it.
OAS and it's completely gone from my brain.
Oh, that's all right, man. It happens.
Oh, yeah. And something else that I've been thinking about, and I kind of want to do a video on it, or maybe a podcast interview with somebody who's been talking about this kind of thing, but something that hasn't even really been contemplated in public discourse around OAS is what's going to be the consequences down the line in terms of people who become mature TFSA holders, right? For right now, the TFSA has only been around since 2009, I think, so 16 years. So if you've been diligently saving and investing and kind of contributing the max every year, putting it into investments, it could be worth around $200,000, $300,000 today. But you take another 30 years down the line, you keep contributing, you keep getting capital gains, that TFSA amount could get up to $1, $2, $3 million in retirement. So you have this other TFSA source, which is currently being used a little bit to create income that doesn't show up on your T4 to kind of boost your OAS eligibility. And now when you get to when people my age are retiring, they could have a mature TFSA that's throwing off another six-figure stream of income. So keep the limits where they are now. You could have people making, as individuals, right, $250,000 per year. They could have as many assets as they want, a fully paid off home, and they're still getting paid OAS from young people. I think there is going to need to be some sort of reckoning there in terms of either increasing the retirement age, which takes a little bit away from everybody, or reducing the limit of income at which it starts getting clawed back, or introducing some kind of assets test. But it can't really continue on the way it is now and be financially sustainable.
I feel like the tough part is that you kind of understand why countries get in such a mess is because that's not going to buy votes. And neither party has a majority where they're going to last 4 years, right? Like I would say that we're probably going to have an election within a year and a half, I would say. We'll find out, but minority governments usually don't last very long until there's another election. But we'll see, right? I don't know.
Yeah, I mean, the last one almost went the distance, right? It was, 3.25, 3.5 years. And
it almost was there.
They're now even closer to the majority. It's like an even slimmer margin. So it's a fairly strong minority government, but I think also the Bloc and the NDP don't have as much incentive to support this government as they did the last one.
Yeah, it's not the bromance like Trudeau and Jagmeet had. I think that Carney knows he can't really go down that path, or he'll seem a lot like Trudeau. Kind of like the cabinet shuffle that we're seeing. I find that he's almost trying to distance himself from what Trudeau had with, Chrystia Freeland leaving and such. But what do you think about kind of some of these people in cabinet leaving?
I think it's probably a good decision. I think his initial cabinet that he started up with wasn't doing enough to differentiate his administration from Trudeau's, which I think is going to be like politically a really, really key thing for Carney to do. The interesting thing I've seen is some speculation that in order to get a lot of these, policy goals that he says he wants to get done, which include things like cuts to public service and infrastructure investments, things of that nature, they might actually need to align with the Conservative Party. So you could have a liberal conservative super duper majority passing at least whatever they can agree on.
I actually wouldn't hate that, to be honest. I think that they could definitely collaborate more instead of the crazy divide that they do have in the House or the last election that we did see. I think Pierre's got some great ideas and Carney and him could work together, but the divide is still very strong, I find, within Canadians.
Yeah, and I think to an extent, a lot of that is just posturing. People have noted that Carney is actually very, very similar to a Harper-era conservative, which, I mean, he was appointed the governor of the Bank of Canada by Harper. Harper tried to get him as finance minister, and he went to the Bank of England instead. And when you look at the actual policies, it is kind of similar. I'm not going to say they're exactly the same, because I know that'll create a huge amount of blowback in the comments section. But when you look at things like, he's trying to cut the size of the public service, that's a big departure from the Trudeau Liberal government.
For sure. It's the 180 from the Trudeau government. There's been a lot of drama. The temporary foreign worker program. I know you've made some videos on it. You've talked about it on your Twitter. What do you think? What do you think is going to happen next? It seems like the Conservatives are really gung-ho about at least decreasing it or completely abolishing it. The unemployment for youth is very, very high. I know specifically in Ontario. It seems like some of these corporations are taking advantage of it. When I look at some of these the MLAs that are put out, what are your thoughts? I think you're more educated on me, so I'd love to hear your ideas and thoughts behind it and what we can do better.
I think the political discourse right now is behind the reality. Like, you'll still see the Conservatives saying, they're bringing in, a record number of TFWs, or they're projected to bring in, a record number of permits for TFWs this year. That's because they're doing their projections wrong. But it's the number's already decreasing, right? We're already seeing a net outflow of non-permanent residents. We are seeing a big reduction in permits, particularly for international students rather than TFWs necessarily. Something a lot of people don't know about is the International Mobility Program, which is kind of in 2014 when the TFW program was coming under major scrutiny for the Conservative government. Jason Kenney kind of split it into two streams. One was what we now call the TFW program, which requires a labor market impact assessment, or LMIA, and the other one was the International Mobility Program for everything that doesn't. So that's a big umbrella program. There's things like work permits for countries where we have a reciprocal agreement, like Australia, for example, or Mexico under the Free Trade Agreement. And there's also things like postgraduate work permits. That's a big slice of it right now. And I think what we're going to see ultimately is that this big reduction in student visas that we're seeing is going to flow through to the International Mobility Program eventually, right? We're cutting off the front end of the flow. In a few years, we're going to start seeing postgraduate work permits go down by quite a bit. But in terms of the TFW program itself, I think it's been a long-standing issue in Canada, kind of since 2002 when Chrétien opened up more work streams for it, more low-paid streams. That continued under the Harper government. They added more professions to the list that were allowed to apply through this program. They started opening up offices in major cities to expedite the process of an LMIA, or an LMO as it was called back then. They introduced the expedited LMO that you could get in a few days instead of a few months. That was used quite a bit in Alberta and BC particularly. 10 years ago, or a little bit more now, back in 2012 to 2014, we had this exact same debate, but with the political sides reversed, right? You saw a lot of progressive outlets like the Tyee and whoever,
even
right?
Trudeau.
We're all talking
Trudeau
about.
tweeted about it, right?
Yeah, he tweeted about. He wrote a whole op-ed in the Toronto Star with like a very sensible 5-point plan on how to fix the TFW program. He got elected and didn't do any of that.
Didn't do any of it. Yeah.
And the thing is, it's because once you see some big political event like a change in government, then people stop paying attention to these issues because they're distracted by other things. And there's constantly groups like Restaurants Canada or the Canadian Retail Association, I forget their exact name, but they're always lobbying for more access to TFWs, right? One of the most absurd things I saw them say was when they re-implemented the 6% refusal to process rule, which is you can't get an LMIA if local unemployment is more than 6%. They said, well, then we should be able to get more LMIAs in areas where it's less than 6%. They're like, it should be faster and easier. Well, no, it's because the situation has changed. Local unemployment is rising, so you can't have it. Like hire someone who is already here, whether that's someone who was born here or someone who immigrated here a while ago, but somebody who's already in the country, right? Because if we've got this big pool of unemployed people, it doesn't make sense to start bringing more and more people into the labor market.
No, 100%. And the employment numbers for the last 2 months have been really bad. I think there's lost over like 100,000 jobs, I think, combined over the last 2 months.
Yeah, although...
Or close to it.
Yeah, something I've talked about in my videos, if you've seen these, is, we have job losses the last 2 months that have been really, really large, but also for the first time in a long while, we have seen a decrease in the size of the labor force, which is a big deal to me because something I was trying to sound the alarm on for a couple of years was even when our job creation numbers looked good, even when we were creating, 40,000 jobs in a month, it was always being outpaced by growth in the size of the labor force. So the net impact on unemployment, at least, was, we were growing the number of unemployed people in the country. It was bad for the labor force as a whole. So if you add 40,000 jobs, but you add 100,000 people, you have 60,000 more unemployed people in the country.
So jobs are declining, but also temporary foreign workers, what I saw, have been leaving Canada. So the population, in a sense, or the number of people who could be in the labor force is coming down, but jobs are coming down. So in a sense, you're kind of at an equilibrium or balancing itself out.
It's not an equilibrium. It's still a bad news situation, but we're unwinding some of the issues that we've had in the past, and I think it's going to be a painful process. I think the data is also going to be kind of confusing. There was a lot of people have been talking about it, but there's been a fair amount of fraud in the TFW program. So some of the jobs that we were seeing created in the past also might have not really existed, right? They might have been ghost jobs. So as people start leaving the country, we're also going to see ghost job losses, right? So it's hard to tell exactly what's going on right now because, the data is messy, and you really can't track fraudulent activity because if you knew it was fraudulent, they would do something about it, or they wouldn't allow it.
They wouldn't allow it. Yeah, that makes sense.
And they have been starting to crack down on some of that stuff. Like that to get a TFW, you have to post a job posting on the Canada Job Bank, and give some time to allow people to apply for it. But previously, there was no mechanism to verify whether or not any Canadian residents had applied for the job. Like the only way to apply for the job was just send an email to this address that is provided by the employer, and it was often an address that you could trace back to some immigration agency. But now they have made it mandatory to include a direct application option on those job postings. So you can apply directly through Job Bank, and that gives people at the IRCC visibility into whether or not people have applied.
So are taking advantage of it.
Yeah, it's a lot harder to game the system now, and so I think
why would somebody hire?
Yeah.
Why would somebody hire a temporary foreign worker? Like there's a lot of talk about it, but why would it be beneficial for a corporation like Canadian Tire or Tim Hortons to hire foreign labor versus domestically?
Well, one of the big things when the low wage stream was still on the table, it's not really anymore because they re-implemented that 6% rule. Unemployment is higher than 6% almost everywhere. But that was a way to get an employee at a low wage who was also on a closed work permit, right? They cannot get a job at any other company. So it is a lot easier to control that employee. And a lot of places, even, Tim Hortons franchise owners were doing things like they would get these low wage workers and they would also provide the housing for them at a cost. So they were, making money on the employee at the company, and they were also making money as a rental property.
Interesting.
But now when you see all these jobs, you may have seen Michelle Rempel posting them on Twitter each day.
I've seen her post it each day. Yeah.
Fast food manager for $36 an hour or whatever. And it's always posted at a wage that is like just above the threshold for the low wage cutoff. So it technically counts as the high wage stream. Now, the way that that's more than you'd be paying somebody even from here to work there, right? Like it's not hard to find someone to manage a coffee shop for $30 an hour. So the way that these LMIA fraud things worked, and I'm not saying any of these specific job postings are necessarily fraudulent, but something that was happening a lot was that employees who were getting hired under these LMIAs would have to pay a large fee to an immigration agency that would kick back some of that to the company. They may have been kicking back some or all of their salary to their employer. And, in some cases, they would charge higher fees up front and the job wouldn't even exist, right? It would kind of only exist on paper, and it was just a way to get into the country on a work permit and potentially have a way to get in on PR later on. Now, one thing that they did at maybe the beginning or kind of middle of 2024 was they removed the bonus points that you get on your immigration score for having an LMIA, because that was kind of considered like, oh, if you're working in a profession that has a labor shortage, you're more desirable as a permanent resident. Now, they were saying like, oh, there's labor shortages in people working at coffee shops or cooks or whatever, which, there obviously is no labor shortage for that because it's non-specialized labor. You can train somebody to do it.
Right.
But it was worth it to pay, $20,000, $30,000 to get that extra 50 points because the permanent resident stream was becoming more and more competitive. And now they've kind of pulled that incentive out, and so you're going to see a lot of that potential behavior in the market going away. I think what you would see now is people who are trying to preserve their immigration status in the country. They might have a permit that's expiring, and so they need to get, this temporary work permit, so they would be paying for this.
What a mess. What a mess.
Yeah.
Let's move on to housing. Rental prices seem to be coming down. It seems that, I live in downtown Toronto. It seems that like everything that they're building down here is purpose-built rentals, and I believe that's by design. It was the most incentivizing route of action for a lot of builders because of the CMHC, the 50-year amortization, and I believe MLI Select, and they would get rid of a lot of the kind of the fees on the front end of building the unit. So what are you guys seeing in terms of rental data? I know it's going to be very different throughout the country, but I'm just curious to know, what are you guys seeing? Is it good for millennials going forward? I'd love to hear what's going on at Rentals.ca.
Yeah, if you want to know more about this particular subject, there's a couple of things that you can look at right off the bat, which is I did a podcast on MLI Select with Dan Foch and Jake Steinman just recently on the Rentals.ca YouTube channel. A lot of good information about how that program is impacting the market and what some of the consequences have been, both good and bad. And then I've also been producing a show called The Data Dive, which is sort of a monthly update on what we've seen in our national rent report and providing some more context and more specific issues. And that's between our kind of like external communications guy, Jack Molatis, and our data services manager, David Isaacov, who is very, very smart and knows probably as much about the rental market in Canada as anybody. Now, in terms of what we've been seeing for rental trends is nationally, as an average, rents are declining, but it's mostly concentrated in very, very high cost markets like Toronto and BC. If you look at regional breakdowns, what you see is that rents across Canada are starting to converge towards the mid-market. So the upper end is coming down fairly quickly, but the lower end is still rising. So you see cities like Winnipeg, Regina still increasing. Halifax is, it's been going up a lot. I forget if it's up or down a little bit this last month, but Halifax has seen a huge, huge amount of rent growth in the last 5 years, 5, 6 years. So nationally, I think you're seeing post-COVID, as people have more mobility, they are going out and seeking affordability in these secondary and tertiary markets because they can work from anywhere, right? Like I don't live in the same cities where my job is theoretically located. And that's kind of a new thing. And so you're seeing that have a big impact on the rental market. Now, at the same time, as you said, we're seeing a big increase in purpose-built rentals, which were previously not like viable or desirable investments for a long time, because it was kind of easier to just build a condo and sell it and walk away from it. And now we're starting to see a return to purpose-built rentals, which I think is actually very good for renters. Instead of having a building with 400 different landlords and 400 different maintenance people, and it becomes there's costs associated with this kind of micro scale management of rental units, right? Mm-hmm. Whereas if you have a building that is professionally managed by one entity, right? You have a like 200 unit traditional style apartment building. There's a lot of cost efficiencies that come with that. Like you can have one maintenance person come and do 12 jobs in a day, right? And you've saved yourself the cost of 11 truck rolls. You can centralize utilities, things like boilers and whatever. So there are cost efficiencies on that side, and I think also people who manage their buildings professionally are much less reckless in terms of how they try to run their business. I think we saw a ton of speculative activity by people who kind of got into financial trouble when interest rates went up. Like people were operating on this very, very highly leveraged position on rental properties that were already not profitable. And then when interest rates went up, I kind of thought that was going to flush a lot of people out of the market. But unfortunately for renters, vacancy rates were also incredibly low at the time. So landlords were able to pass those costs through to renters. But now there's enough supply coming online that they can't really do that anymore, right? There's more competition in the market. People have more options. So you can't just take all of your interest payments and pass it through to your renters. So the people who are the most leveraged, who are engaging in the most risky activity, the least viable investments, they're starting to run into trouble. You see that in Toronto's condo market for sure.
100%. Yeah. I actually live in a purpose-built rental where I'm in right now. And the incentives you can get are putting out mom and pop investors. There's no doubt. Like when people come to me and they ask for, hey, can you help me rent something? I actually send them to purpose-built rental places first, where I'm not going to get paid. There's going to be no incentive for me to do it, other than I know that it's going to be the best deal for those people because they're getting 2 months free rent. There's across the road here, they're giving you a free gym membership to Altea, which is a big nice gym in Toronto with your rent. So it is very viable. And like you said, there's 2 people that are in each building that I live in, and they are the maintenance guys. And something goes wrong, you can text them, and they'll be up at your unit in probably 10 minutes, and it's all fixed and done for you. So it is very, very much a well-run operation, where I think a lot more people who probably don't want to buy a condo downtown Toronto, but say they want to come down here for 5 years and work at one of the big banks or maybe a tech company, it's very incentivizing. And you see it too. Every one of my buildings, young and they're just working hard, trying to build their career and stuff like that. So like in my long-winded answer here is that they are very, very attractive and they're good for the city of Toronto, and I'm sure other places. Are you seeing people build in those areas that are going up, or are they going up more because there's not a lot of purpose-built rentals there, some of the cities in Canada?
It depends on the market. CMHC recently released their housing supply report, and we're starting to see, a record proportion of apartment construction, or, not a record, but as of the last few decades, a record proportion is purpose-built rentals. And in some markets, most markets actually, we're seeing housing starts increase. Like Calgary has a huge number of new housing starts per capita. So does Edmonton. I think Halifax has been going up. I would have to check the chart again. But pretty much everywhere other than Toronto and Vancouver are up. And then Toronto, Vancouver, who massively overbuilt these tiny investor-focused condos, their housing starts are going down. But again, it's one of those regional variation things where you might see the headline of nationally housing starts are down. That's driven by markets that basically engaged in irresponsible construction behavior. Yeah. And now those investors are getting kind of flushed out. All this supply is flooding into the market. And so there's not really much incentive to build until that situation shakes out. But in other areas where there is a viable case, especially with these incentive programs like MLI Select, whatever comes down the pipeline with Build Homes Canada, those places are seeing still a boom in purpose-built rental construction and overall construction. But like I said, I do think that when you make these projects more viable, you can either create more cost-effective units for renters, like things that are not as expensive to rent, or you can otherwise just increase the vacancy rate in the market. In one episode of the Data Dive, David had this really good point about, since the 70s, we took away all these tax incentives to make purpose-built rental buildings. So there's very, very little purpose-built rental construction. And so normally what was happening before then was that new buildings would come to market. They might be at a little higher price point, but eventually those would age into the more affordable part of the market, right? So a building that was built 30 years ago, that was luxury at the time. Over time, it ages, it depreciates a little bit, it becomes more affordable housing stock. And once you cut off that new construction part of the market by reducing tax incentives and increasing development charges and all these other things that make the projects non-viable, what ends up happening is that older stock, the most affordable stock, gets repositioned, as they say. So they renovate it, they move it back up to the top of the market. So you're taking housing from one segment of the market and moving it to another, and that kind of removes your affordable housing stock. Whereas what you would normally want to do is keep introducing new construction at the front end and letting it flow through into more affordable housing.
Would it be safe to say then, if we're seeing this boom in rental construction because of the favorable terms that CMHC is giving to purpose-built rentals, could it not be the same for actual resale if we cut the fees and the levies on resale and build more, 3-bedroom, more family-friendly homes, that we could have more, because our birth rate's going down, right? So could we have more millennials buying into these opportunities where they could actually have a family and have enough space to raise a family in? Could that not be the same thing, where prices could also come down on the resale if we get out of the way, in a sense?
Yeah, sure. And I think part of that is, again, reducing red tape, development charges, all that stuff. But, also zoning reform, I think, is big, because it depends on where people want to live, right? If you just allow infinite sprawl forever and you keep restrictive zoning in place, then you're just going to have people commuting 2 hours from their home to wherever they work. Whereas other people might be fine in a townhome situation or a row house, right? If they want to live closer to the city. So I think, the zoning reform that we've been seeing is going to be helpful. I think, there's still more to go. I think there's, as you said, we could provide incentives for new home construction. But I also, to an extent, think we need to see capitulation on land values.
Right.
The way I like to think about it is, people always say, the true value is in the land. And I'm like, well, no, the true value is in the improved land. Like, the true value of any property is in the usage of it, right? If you imagine you had a plot of land in the city, but you weren't allowed to build anything on it, you weren't allowed to visit it, you weren't allowed to rent it out, what would that be worth? $0.
Not much.
Right?
$0,
maybe negative, because it could be a liability in some way.
Yeah.
So what people actually want is, the land with a house on it. And the thing is, when interest rates go up, money becomes more expensive. The amount people can afford to pay for that whole package is less. But the cost to build a home doesn't go down. In fact, it goes up because financing is more expensive. And so what has to go down? It's the land value. The land value is just whatever is the difference between the price that it's worth in the market and the cost of all the improvements, right? Mm-hmm. The land value is actually a dependent variable, not an independent variable.
Did you agree with Tiff Macklin dropping the rates by 25 basis points? I know we said that, our GDP contracted for the quarter. We had a lot of unemployment. It still feels like inflation is sticky, not just here, but in the US. So I don't know. I felt like he was his hand was forced, but I don't know if it was necessary to do the quarter point. But
yeah, it's sort of an atypical move, right? And what I've been saying for, a couple of years now is that the Bank of Canada is being pulled in different directions on monetary policy, right? They don't actually have the power to fix the situation. They kind of have a choice between trying to control inflation or trying to stimulate the economy. And right now, a point where there's no sweet spot to do both of those things at the same time. They actually made this cut while their core inflation measurements were at or above the upper bound of their target range, right? It was like 3% for one of them and 3.1% for the other one. Now, headline inflation is down, but that's a lot more volatile. There's a reason they use these core inflation measures that cut off like the highest and lowest inflation numbers. And it's because that's kind of a measure of what the actual core prices are doing. Like food inflation, for example, is still well above 3%. It's like 3.6, something like that. And that's an important thing. You need that to live.
Yeah.
And so if we're seeing more inflation, I think that's not going to help people that much. And there's definitely a question of whether or not it will spur productive investment in the economy to cut rates low again. I mean, we saw it, they tried it for like 10 years after the 2008 recession, and it just led to things like more investment into real estate because the prices kept going up and up and up, or people hoarding cash, whatever. It didn't actually lead to more investment into things like machinery and equipment or intellectual property products or worker training or salaries or anything like that.
Very true. I remember I was looking back at a chart looking at interest rates being, and in a sense, negative compared to the rate of inflation. It's cheaper to borrow money than it was to watch the money inflate away. So that's where a lot of money went, right, was into real estate. As it just kept going up and up and up. And now people are dealing with, what I'm noticing in the real estate cycle is that people used to move every 5 years. It was kind of like the norm. It was, wait 5 years, our home is appreciated enough, we can move up a step. And now that is not happening at all. So people are kind of in that 2020, 2021 zone, and prices are either flat or they're negative equity on their home. So they're not actually making that move now. They're just saying, well, if I sell, I'm going to lose all this money. I have to stay. So I'm kind of curious to see where that cycle goes. What I'm noticing too is, I think Ontario is getting hit a lot by the Trump tariffs and not having a deal just yet, obviously being our neighbor right there. But what do you think about the tariffs and no deal yet? I feel like one of Carney's campaign promises was the deal. Are you in the camp that no deal is better than a bad deal, or do we just need a deal done so we can have more certainty for some of these workers?
I mean, I think we're going to get to a deal eventually anyway, right? So why not just focus on trying to get it done?
Just getting it done.
I think, like I said before the election, one of the most reasonable takes I heard on it was actually from Pierre Poilievre when he was in his interview with Jordan Peterson. I find some of these like long form interviews he did, he's so much more like reasonable and likable than his campaign trail stuff. I think they made a big error there of trying to make him like too fiery and anti-woke and just like spewing slogans over and over. But in this longer form interview, he said, well, basically, we're not in a position to really play hardball with the U.S. There's obviously motives that they have, and they want certain things in a deal. So it's better to just try and focus on getting a win-win deal now instead of, doing this long protracted trade war that's just going to hurt both countries, but especially Canada. And I think it was fairly obvious in the early stages of the tariff talks. Trump did make some signals about things that he wanted, like one is lumber. That's always been a contentious issue. Access to the Canadian dairy market, which again has been a long-standing thing with our supply management, and I think banking access. Like they want to push banking deregulation to Canada, which I think we should not do. But I wouldn't be that mad about concessions on the dairy supply management side, for example.
Yeah, that's fair. Yeah. I think that you're totally right. I thought when I listened to that interview with Peterson, it was before Carney came in, and I was really excited. I was like, you know what? He's inheriting I think he said in the podcast, he goes, the Liberals got the party and I'm going to get the hangover. But I was excited for him to get into power. I thought he had some good ideas. And then, this Trump boogeyman narrative came in and Carney ended up winning. But it seems to me like, they're kind of doing political theater where we're signing a deal with Iceland and we have like barely any trade with Iceland, right? And Jamaica, I think, was another one. It's like there's not much going on there. Like, shouldn't you be focusing on like what you said? We're going to get to a deal eventually. Let's just do it now so we have more certainty. But I also think that where we could run into some GDP contraction is from the loss of workers that are, our population stopped growing. Because I feel like that was a big contributor to our GDP was the growth of our population. Obviously, people needed to spend money. So I'm more of this camp that I think that GDP will continue to contract because A, we don't have a deal with the U.S., and B, is that we're losing people spending money in the economy. And I think those numbers will continue to decline. But what are your kind of thoughts on my thesis there?
You're probably right, but I also think that headline GDP is kind of a useless metric in this current unusual situation. This is something that economists really have a hard time grappling with, is anytime something unexpected is happening, these traditional metrics are not going to be a good indicator, right? So for a few years, I I was like fairly early in talking about real GDP per capita, because I was saying like, yeah, GDP is growing a little bit, but our population is growing faster than GDP. So more than 100% of our GDP growth is from population growth. That's not a positive situation. So if we start seeing
It's not productivity.
exactly, right? It's
Yeah.
Don Wright has written extensively about this on his Substack called Blindingly Obvious, about the transition from sort of high wage, high productivity economy to a low wage, low productivity economy, and how it's been going on for decades and decades, which is very interesting stuff. But yeah, to your point, if we see population decrease but GDP per capita increasing, I think that would be a positive sign for the average person, right? Because
Right.
you know, people say it's not valid to use GDP per capita as a metric, but I think that's just for doing like head-to-head comparisons of countries. I think the time series within an individual country is a good indicator of how things are going for the average person. And what we've been seeing is, you know, realistically, the average person in Canada has been experiencing a recession for what, like 10 quarters now? And so to say like, oh, we barely avoided a recession, where the recession is 2 consecutive quarters of headline GDP contraction, I don't think it matters, right? It's one of those things where, you know, the economists were calling it a vibe session or whatever, or like we can't, you know, why people are feeling so negative, even though all these like headline indicators are good. It's because people don't have money. Like just go talk to people, see how they're actually experiencing things. And, you know, a lot of people are struggling with the cost of living, struggling with job searches, and struggling with like, wage stagnation, housing costs, like everything, right? So, you know, I do think a declining GDP per capita is a problem.
What do you think would boost our economy? What do you think that Carney and his government can do to, you know, hopefully put some, inject, other than printing money, inject some life into the Canadian economy?
Yeah, it's really more, we have to take a long-term view on things.
Right.
We
Short-term
have
pain.
dug ourselves into a deep, deep hole here, and it's going to take a long time to undo. I would say like on the order of decades. Like to the point about the transition from high wage, high productivity to low wage, low productivity. It originates from this idea of like in the post-war period, the idea was that companies would have to compete for workers. And so if they wanted workers, they would have to raise their salary to be more competitive. And because of that, the company would have to be more productive in order to compete in the marketplace. So they would have to invest in things like machinery, in training, in whatever. And also at that time, I think it's really important to note that companies saw skilled labor as something that they had a hand in producing rather than just an input to the business. And it was around kind of like, I don't know, the 70s through the 90s that we started saying, okay, if we can't find somebody to hire at this price, we'll call it a labor shortage. And then the government say, okay, so instead of trying to compete to hire someone in Canada, we want to support your business in doing what it's doing right now rather than trying to do things differently. And we'll just allow you to hire someone from the international labor market. And over time, that basically just meant that companies didn't necessarily have to grow their productivity per work hour, right? They could just get more labor from wherever. And I think, you know, the TFW program is a big part of that, but even a lot of the like permanent resident streams that we've had have been used to essentially manage our way to a surplus of labor in the market so that companies don't have to do that thing of competing for workers and increasing wages and increasing productivity over time, right? We were trying to support companies in doing business as usual. And anything else was kind of seen as like a crisis. So yeah, in terms of what we can do to boost the economy, I think we need to take a longer term view on how we manage the labor market. I think we do need investment into actual infrastructure. I do think that investing in more purpose-built rental construction is going to be helpful because that, again, you know, in an economy where workers are more mobile, that gives them a lot more mobility, right? You know, for the first like 10 years of my career, I was renting, and because it was affordable, I could keep saving money, but I also had the opportunity to pursue any new job opportunities that came up anywhere in the country, right? Because I had an affordable place to live more or less wherever I wanted to go. And there was, you know, vacancy and availability. So I think giving young people who are at the start of their careers a lot more flexibility, and even, you know, people who might be older and just continue to rent because they want to hop around the country, do different jobs, I think that'll help a lot. For several years now, we've been in a situation where the rental market was so tight that people couldn't afford to move. And it's the same thing with housing prices, right? Where the home prices got so large that the transaction costs became prohibitively expensive to buy or sell a home, right? So
true. So
yeah,
true.
so you can't, sell your place and buy a different place on the other side of the country. That also kind of indirectly led to a lot of people becoming mom and pop landlords because they're like, well, it doesn't make sense to sell the place. I'll just,
pull equity out and buy a
pull
place.
equity out,
Yeah.
and then put 5% down on a new place somewhere else and be carrying 2 mortgages to get a different job.
Yeah.
Or
Yeah.
were just stuck in place, whether they were owning or renting. So I do really think that more rental supply is going to help out. And I think, not to say that home ownership shouldn't be a goal for people in the longer term, but I think the kind of stigma against renting needs to decrease a bit as well. And this like big idea of if you don't get into housing, you're just throwing your money away. I think people need to buy when they're ready to settle down in a place and when they're in a financial position to do so. And more affordable renting will help people to get there. I think it helps class mobility as well, right? Like if I was spending all of my money on rent, I would have never been able to save up money to buy a place.
Yeah. Yeah. I think that's a great place to wrap up. This was great, man. I really appreciate you coming out and doing this. I'm going to link all your stuff down below, Rentals.ca and everything. I'll get all those links from you and your main channel too, Millennial Moron. That you put out some great stuff. I do love it. It's a great the kind of news recap that you're not going to get on our national broadcast or anything like that. So I really do appreciate it. And anything else we can plug for you?
Yeah, OGGI, promo code Moron, 20% off.
Okay, yeah.
So, it's kind of like my buddy's company.
Your buddy's company. Oh, that's good.
But the product is really
nice.
great. I actually use it. So.
Yeah. No, we actually use ghee too, so I'll actually look into it. It actually is good stuff. It's way better than cooking with oil. But anyways, guys, we appreciate you guys tuning in so much. Thanks to Millennial Moron for coming on. It's always a great chat, and hopefully we'll have you back on soon. And once we get a little bit more data out there, we'll see where we are in another 6 months or so.
All right. Thanks for having me. Talk to you later.
All right, man.